Yes. Good evening, everyone. Respected dignitaries, Central Council member, esteemed speaker, and learned member of the Institute, and all the attendees joining this session virtually. A very warm welcome to each one of you. Myself, C. Rajesh Agrawal, Regional Council member, WARC, delighted to be your host and moderator for this seminar on taxation of builders, developers, and flat purchasers, organized by the Direct Tax Committee of ICI. This session is part of our continuing efforts to bring clarity and expert insights on complex tax matters that impact various stakeholders in the real estate sector. We are well overwhelmed with the huge response from across India for this seminar. Sir, the name is sufficient for this topic. Vimal Pumnia sir, considering the name and topic, we have received huge response for this seminar. The real estate sector is a complex domain from tax perspective with significant financial transaction, intricate agreements, and evolving tax laws. The taxation of builders and developers has become a critical area of focus for all of us, including stakeholders. Today's topic will address essential issues with respect to the real estate sector, such as capital gain, tax implication with respect to JDA, important provisions like Section 50C, 43CA, 56 to 10, additional concepts like with respect to builders, developers, and capital gain tax, various exemptions with respect to income tax 54, 54F, and others. We will also dwell into the tax treatment from both perspective, landowner and the developer, and discuss various judicial interpretations, practical challenges, and planning strategies. With frequent changes in tax laws, this topic is highly relevant for all of us. This session promises not only simplify the complexities, but also equip us with clarity on the subject. This courtesy of our expert subject speaker, CA Vimal Pumnia sir, who will be walking us through this intricate landscape. I just like to introduce in absentia Chairman Direct Tax Committee, our Vice Chairman of Indirect Tax Committee, CA Vishnu Kumar Agarwal, Central Council member. It is my pleasure and honor to introduce CA Vishnu Kumar Agarwal, who has been instrumental in curating this relevant topic for all of us. Vishnu sir is a Central Council member for the term 25-29 and currently serve as Vice Chairman of both the important committees of ICI, Direct Tax Committee and CP Committee. He is also an active member of many different committees: Standing Committee, Executive Committee, Management Committee, and Finance Committee of ICI. His leadership includes serving as Chairman of WIRC of ICI, biggest vision of ICI during 2017 and 18. He served 3 consecutive terms at Regional Council of WIRC during 2010 to 2019 in different capacities. A chartered accountant with over 2 decades of experience, Vishnu sir specialized in income tax, particularly search and survey proceedings, Benami and black money proceedings, ITAT litigation, and appellate work. He is author of very important books, including Landmark Judgments of Income Tax, a widely respected resource in the tax profession. As a passionate speaker, he has delivered numerous seminars and conferences across the country. In addition to his professional achievements, he is deeply involved in social cause and connected with different organizations like Aravali Agrawal Samaj Mumbai, Lions Club of Mumbai, Bharat Vikas Parishad, and so many. Let us now invite virtually CA Vishnu Agrawal sir to share his thought. Sir, please.
Thank you, Rajesh. Very respected and my own principal, CA Vimal Punmiya ji, today delivering the subject. Regional Council member and my very good friend, Rajesh Agrawal, and he is the past chairman for Pune branch also. Our office, senior in the profession, ladies and gentlemen. I welcome all of you in this webinar on the real estate matter because we thought that lot of controversies are there and Vimal Punmiyaji is the right person for this particular subject. Friends, Vimal Punmiyaji is my principal also. I have gone under him only articleship and post after the CA. I have done 2 years experience from Vimal Punmiyaji. So my all the journey, he is the back supporter to me. Friends, at the direct tax committee, we are doing so many works. We have given the uh, presentation for before the selection committee for the new finance bill 2025, and I request each one of you attendee friends, if you have any idea, any suggestion for this finance bill 2025, just to mail on the dtc@ici.in. Friends, we are just coming for the revised guidance note under section 44 AB of our tax audit, and also we are also coming with the checklist for the all the ITR forms from 1 to 7. Friends, under the direct tax committee, we have taken council has taken a wide decision for that. Before that, any partnership firm, one partner can do tax audit on behalf of the another partner. Friends, in the last council meeting, we have taken the decision that individual partner can do the tax audit for the respective 60 tax audit for the for any individual capacity only. Now onwards from 1/4/2026 onwards, any partner cannot do the tax audit on behalf of the another partner. Tax audit limit same retain the same, but for example, we are 4 partners. I am doing the audit, 240 audit on behalf of the another 3 partner also. From 1/4/2026, the council has taken the decision that all the 4 partners will do the tax audit individually in individual capacity on behalf of the firm. Now onwards, from 1/4/2026, any one partner cannot sign more than 60 tax audit in a particular financial year. Friends, this in last our council meeting, this is the we have taken the decision. Apart from this checklist and revised guidelines for the tax audit, friends, we are day-to-day activity. We have given lot of suggestions to the CBDT, and also we have also given lot of representation for the day-to-day activity like TDS and other matters before the CBDT. Friends, I will not take much of the time because today we have the learned speaker Vimal Punmiya ji, very senior member, very senior speaker from Mumbai, and he has given more than 500 lectures across the country and abroad also. So once again, I welcome all of you and Vimal Punmiya ji, my own principal, in this webinar. Thank you, friends. Rajesh ji.
Thank you, sir. Thank you very much, Vishnu Kumar sir, for your valuable words and for being a pillar of strength and vision of this committee. And now, our distinguished speaker, CA Vimal Pungliya sir, a name synonymous with in-depth tax knowledge and real estate taxation. He will guide us through the intricate subject of taxation of builders, developers, and flat purchasers. CA Vimal Punya sir has been guiding light for many professionals, and we are privileged to have him with us. Sir is a veteran chartered accountant with over 48 years of professional experience and the proprietor of Vimal Punya and Company, a reputed consultancy serving more than 1,000 clients, including resident, non-resident companies, firms, trust. His expert knowledge includes tax appeals, search, seizure, property related regulations, including stamp duty, registration, RBI, company law, cooperative society matters. He has been a member of the TDS Standing Committee appointed by the Income Tax Department, advisor, director, and trustees of over 250 institutions, author of many renowned books on transfer of flat, capital gain, stamp duty, search and seizure, NRI provisions. Sir, big profile of Punya sir, speaker at over 2,500 seminars, both in India and internationally, including those organized by the High Commission of India in the United States of America. His articles have appeared in Times of India, Accommodation Times, Chartered Accountant Journals, and numerous professional publications. From leadership roles in organizations like Lions Club, All India Business Council, and Bombay Metropolitan Junior Chamber to guest lecturing at HR College, CA Vimal sir has left an indelible mark on both the professional and civic landscape. We are truly honored to have you, sir, with us through this critical topic on taxation of builders, developers, and flat purchasers today. Sir, the virtual stage is yours. Please take a charge.
Thank you, sir. Thank you.
Sir, as a principal, please say 2 lines on Vishnu, sir. It will be privilege.
CA Vishnu Bhai Agarwal. I have long associated with him for last nearly 25 years. When day he become chartered accountant, we working together. And every case he used to do some more research. And on the contrary, I've learned many things from him. And even today, when we meet in the tribunal practically every day, I have seen many young chartered accountants, they stay in the courtroom just to hear the Vishnu Bhai.
Really appreciate.
So, and that is the result. Today, the member of Central Council and the Vice Chairman of Direct Tax Committee, Indirect Tax Committee.
A proud moment for you also, sir.
Yes, sir, 100%. And Agarwal Sahab and Namrata Jhamar and friends. Straight we will come to the topic now. Our topic today is taxation of builder, developer, and flat purchaser. When we talk about flat purchaser, means capital gain. In last few years, number of development has taken place in this area, and main reason is that the real estate price has gone up like anything. And when price goes up, naturally tax revenue also goes up. And whenever income tax department get more revenue, they are want further more. And things are going on in that way. So first we'll deal with the builder and developer. Of course, topic is very vast, but we'll devote 1.5 hours, roughly 45 minutes on builder and developer, 45 minutes on the capital gain, then next 15 minutes for the question answer. And even some questions remain, sir, you can forward to me. I will reply to that online. Now coming back to the builder and developer, basically there are two types of development is possible as on today in the present scenario. Some builder purchase the land, debit to the work in progress account, spend all the money, go on debiting to work in progress account, and end of the day, they sell the property, whatever business income is there, they pay tax on that. Now, as the land value has gone up like anything, many times it is very difficult for builder to take up the project, purchasing outright and developing it. So new concept development has come in light, which is called redevelopment or which is called joint development. So landowner feel after purchasing when builder purchase the land, then also is going to make profit. So why I can't develop it? Now it may not be practical for landlord because I'm based in Bombay, so I will talk about more about Bombay, but same position everywhere. In Bombay, you need nearly 30 to 40 approval from the various government agencies, and only a professional person can get that. Ordinary landlord will spend his whole life and will not able to get all the NOCs. So landowner, what did he do? He will make a joint development agreement with the builder. Okay, I will put my land, you put your money, you construct it, pay me something, and give me certain areas. So that way, so builders save this capital investment. Big project can be taken care of, and many person stakeholder can come together. Some may be real estate, some may be financiers, some may be solicitor, some may be advocate, and things goes on and on. So as far as builder is concerned, joint development can be of any type. There can be a sharing of profit, there can be a sharing of the area, there can be a sharing of mixture, partly money, partly area, there can be a sharing of many things. So there is no hard and fast rule as far as income tax is concerned. They say whatever builder make the profit is supposed to pay tax. Whatever landlord make the profit, he can pay tax. Landlord can pay as a business income, he can pay as a capital gain. As far as builder is concerned, it is a straightway business income only. He can form a LLP, it can be a partnership firm, it can be a company. Now, main question come before the builder is beginning में that what is the system of accounting what he has to follow. Now, basically, earlier we were known there were two systems of accounting. One is project completion method, second is percentage completion method. Now, both are going on for last number of years. Project completion method means I go on debiting to the work in progress account. When finally my project is completed, occupation certificate received, completion certificate received, because in India, many part completion received certificate is received, occupation is not there. Many area, like in Bombay, we receive occupation certificate first and then we receive completion certificate. Extended Mumbai like Mira Road, Bhainder, Virar, Vasai, there they get completion certificate first and then they get occupation. So basically, whole idea is that the moment the flats are habitable, house is habitable, municipal corporation or panchayat issue the certificate, now you can occupy this property. That is the cutoff point, and that is the point of taxation at that time in case of completion project system. The moment that point of time, builder whatever money he received, whatever money he spent, that time he is supposed to pay tax on that item. Now, second is the percentage completion method. Now, what is percentage completion method? Again, it is not defined in Income Tax Act. So, I can take certain percentage of expenditure incurred, or certain percentage of sale taken place, or certain percentage of money received, or certain percentage of anything, whatever suits to builder. There is no definition. But whatever he follow in the first year, same is to followed year after year. If you want to change, then of course he has to take the approval of the income tax officer and he can change it. So basically, there were two systems, project completion method, percentage completion method. Somewhere in 2002, our accounting standard 7 came. And that time, everyone was in the impression, including income tax department, that we have to now offer profit on the percentage completion method only. Project completion method is not there. And ITO made heavy additions also. Matter went to the court finally, and court have decided that accounting standard 7 apply to the contractor and not to the builder. Accordingly, builder were not affected. So again, project and percentage both were active. Then AS9, accounting standard 9 came in the picture, and that time they said this applied to the builder and developer also. So again, there was a controversy. Again, matter went to the higher authorities, and in appeal form it was decided that institute can give direction how to maintain the accounts, how to show the profit for accounting point of view. But as far as income tax is concerned, income tax department is there, and income tax department recognize both the system of accounting, percentage completion method as well as project completion method. So this was again things were settled. Somewhere in 2015, income tax department came with 10 their own accounting standard, which is known as ICDS. And ICDS 3 applied to the builder and developer. So again controversy started. ICDS 3, now it is from income tax department, so binding. So practically, it again percentage completion method was recognized, project completion cannot be followed. Then in Bombay, there is one association called Maharashtra Chamber of Housing Industry. They have more than 10,000 builder member all over India. So they approached the central government, finance ministry and CBDT chairman, etc. And then board came with the circular that if project started before 31st March 2016, then they can follow old system, project completion method also. Project started after 1st April 2016, they have to follow only percentage completion method. Then again presentation was made that person who have started project before 31st March 2016, they can follow project completion method. It means they have to pay tax only when project is completed, which may be after 4 years, 5 years from starting of the project. And those person who start now, they have to pay tax every year on the work. And tomorrow project may make profit, may loss, project may take off, may not take off. So money will be blocked there. So then department, after considering our Institute of Chartered Accountant, their suggestions, Income Tax Department decided to withdraw ICDS 3, and they say we will consult the stakeholders, we consult the Income Tax Department, we consult all the interested parties, public at large, and we'll come with a new ICDS 3 which will apply to the builder and developer. So as on today we can say ICDS 3 is not there. We can follow any system of accounting, whether it is a project completion method or percentage completion method. Project means you to offer profit only when the project is completed. Percentage means percentage of anything, money received, agreement taken place, work completed, or any third combination of anything. We can start with the percentage profit 4%, 5%, 10%, 15%, whatever estimate. ITO cannot dispute that. But end of the day, when project is completed, when occupation certificate is received or completion certificate received, we are supposed to pay tax on that point of time. So that as far as project completion method and percentage completion method, things are very clear. It is option of the SSE, what he want to follow, what he don't want to follow. Now coming to the next item in the construction of the builder and developer, section 247, which talks about the transfer. Now actually when transfer take place, when I'm liable to pay the tax, the question is that tax comes only when, for example, there is an income tax concept, there are two things. One is occupation, one is the occupation, one is the possession. Now possession means, I say, for example, I'm a landlord. I give to somebody possession of the property. It means what right I'm giving? I am giving him a right to resale. I am giving him a right to use and occupy in all respect. I am giving right to take loan from the bank, mortgage the property. So then I parted with the possession. The moment I part with the possession, person is liable to pay the tax. Whether money received or not received, nothing is relevant. I am liable to pay the tax on that. In case I have not parted with the possession, in agreement I very clearly written, you will not able to sell this property. You will not able to mortgage this property. For example, there is a joint venture. I just say, tell the builder, you construct 100 flat. You 50 you give me in view of the land cost, and 50 you sell whatever way you want. Then he will able to sell his 50% only once he hand over my 50%. If such conditions are there, it means I have not parted with the possession, I parted with the occupation only. Like I give property to somebody on a tenancy basis, he pay me monthly rent, or I give property to somebody on leave and license basis or a lease basis, and he's paying me monthly rent or yearly rent or whatever amount agreed. I have not parted with the possession, I parted with the occupation. He can use and occupy the property. Possession means I've given right to sale, I've given right to mortgage, then I parted with the possession. And moment I parted with the possession, I'm supposed to pay tax on that. But there are certain exceptions. In case of, if I parted with the occupation, in case I parted with the possession, but certain situation I'm not liable to pay the tax as a landlord. First condition, in case there is a loss of the compulsory acquisition of the property. Government acquired the property. Property waste to the central government on the day when it is occupied by the government and when award is passed. But still I am not liable to pay tax on that day. I am liable to pay tax when property is received from the government or money is received from the government. Maybe 100% money I received, I'm supposed to pay tax. Sometime I received in the part, I'm supposed to pay the tax. Compulsory acquisition, let me just, if we have touched this point, let us finish that also. Up to 31st of December 2013, when government acquired any property, it was taxable in case of a landlord, in case of a owner as a capital gain. And in case of a, of course, builder, businessman, it was a business income. Now, whatever government has given you the money, and again, there are two types of acquisition. One is compulsory acquisition, government passed the award, property based to the central government or state government or municipal corporation. Whatever money I receive, I pay tax on that. Sometime, for example, war is going on and government want to acquire the property on a top priority basis. There is no time to give negotiation and discuss and that. Then government work out the money, pay you 80%, compulsory take the possession of the property. Then you go on fighting with the government will give you extra money later on. So whenever you receive the money, we were liable to pay the tax. 1st January 2014 onwards, law have changed, and what the law says, now if compulsory acquisition, we are not liable to pay the tax. If government acquire the compulsory acquisition में any property by the central government, by state government, by municipal corporation, it is completely exempted. So what is the relevant date? Date of award. If date of award is before 31st December 2013, we are liable to pay tax. Date of award is after 1st January 2014, we are not liable to pay the tax. And once you are not liable to pay the tax, it means whole amount, whatever money you receive in 14 or some further enhanced compensation you receive later on, or you receive 80% now and 20% later on, you have received two installment of 50%, nothing is liable. But the property acquired before 2013, and then you receive advanced compensation even 2025 or maybe 2030 later on, that time you have to pay the tax. If what is the date of award, date of acquisition by the government, that date is very, very important. Second item comes, there is a fire and I destroy the goods and insurance company give me the money. So whenever insurance company give me the money, that time I have to pay the tax and not at the time of fire. It is not sale. It is just theft. Third very important point comes, that is only applicable to individual and HUF. From assessment in 1819, section 45 subclause 5A, capital A, that was amended. So let us discuss what was up to assessment in 1718 and what is the development after 1819. Up to 1718, let us take one example. I am a landlord. I have given property to a builder with understanding that you construct the flat, let us say 100 flat, you keep 50%, give me 50%. Your 50% flat, you can sell, mortgage, do whatever you like. My 50% flat, you to construct and hand over to me. You can't do anything as far as my area is concerned. Now, in that situation, what happened? I given my land to him. I've already given his 50% sale and mortgage right. So I parted with the possession indirectly. Now, my 50%, what I am holding, even I have not received anything. Tomorrow builder may give or may not give or God knows what happened. Agreement is executed, stamped, registered. Then I am liable to pay tax at the time of signing the agreement and not at the time of possession of the property. The moment I signed today, I have not received anything. I parted with my 50%. Practically, I have given him 100% occupation, 50% possession, 50% occupation. So he will construct 100 flat, 50 he will hand over to me. Now, what was the calculation that time? I have given 50% land. What is the market value of the 50% land? Let us assume the safe side 5 crore rupee. He will go hand over to me 50% area. Let us say 50 area, 50 flat area is 50,000 square feet. So what land belong to me only. I've given him 50% land. 50% still is with me. I parted with occupation only, not the possession of my 50%. So his construction cost. Now he will be doing 50,000 square feet by construction cost. Normal say rate at the rate of 2,000 per square feet. So it will work out to 10 crore rupee. My land value is 5 crore. What I'm going to get by way of a construction cost is 10 crore. 10 crore is higher, so I'm liable to pay tax on 10 crore. Now I don't receive single penny. On the contrary, given my land, but still I'm liable to pay the tax up to assessment of 1718. So what happened if I don't have money? I was forced to take money from the builder and take lesser area. And tomorrow, if project is not taking off or they are not completed, I have not received flat from builder, still I'm out of my pocket on account of income tax or whatever thing. So for individual and HUF, from assessment in 1819, law is amended. In case I part with the land, I am entitled for 50%, builder is entitled for 50%, land I've given to him, then I am not liable to pay the tax when joint development agreement is signed, but I am liable to pay the tax when project is completed. It means when occupation certificate is received. In Bombay, we call it occupation, other part it may be completion. So when occupation or completion, whichever is earlier, if that certificate is received, then I am liable to pay the tax. But working is different. Now, earlier I was liable to pay tax on a construction cost of my 50% area, or rather my 50% area, total 100%, my 50 flat. And when I sell, what was my cost? Land cost of 50% area, construction cost of my 50% area, total amount divided by number of flat. Each flat I used to sell, I will pay that whatever cost with indexation, and balance I was liable to pay the capital gain tax. Now what is the working is, now I'm getting 50,000 square feet area. So my 50,000 square feet area, including land, what is the market value at a ready reckoner? Bombay may be called ready reckoner, and everywhere different word. Somewhere it is called, I think, is Delhi may some other word is there. So government of Maharashtra publish that reckoner every year. Circle value. Delhi may call circle value. In Bombay, maybe say ready reckoner value. So that value of 50 flats. Now, construction cost may be worth 2,000 rupees per square feet, but flat may be worth 5,000 rupees per square feet. So I have to count 50,000 mein at the rate of 5,000 square feet, which work out to 25 crore rupee. I deduct my 100% land cost because already flat value is there. So department is treating land separate, flat separate. So 100 area complete with indexation etc. which was available. That cost may work out to 10 crore rupee. My 50% land was earlier 5 crore. Now my 100% will be going there. So 55 minus 10. 15 crore pay, I am liable to pay the long-term capital gain tax when I receive the flat. And whenever I sell, that will be my deduction cost and the rest of the tax normally will be applicable. But in case I sell some flat before I receive from him, if I sell some flat before I receive the occupation certificate or completion certificate, then in the year when I sell, for example, out of my 50 flat, I sold 5 flat. I am need of a money. So those 5 flat, I have to pay tax when I sell the flat. Remaining 45, when I get on occupation, and after that, when I sell, that time I am liable to pay. So when I receive OC, that time I am supposed to pay the tax on that. So this is also very, very important amendment as far as builder and developer is concerned. Now, conversion of stock, that also for builder point of view, very important. I have a balance sheet. I have land cost, say for example, 1 crore rupee, appearing in my investment account, lying there for last number of years. Now I want to convert that land into my stock in trade. Today market value will be 10 crore rupee. Original my cost is 1 crore. So I convert as stock in trade at 10 crore. I don't pay tax anything at this point of time. If you go originally back maybe 20, 30 years, conversion from investment to stock in trade or stock in trade to investment, no tax was there. But later on law is amended. So what is, as on today we'll discuss. I convert my capital asset to stock in trade. I'm not liable to pay the tax today. Simply it will disappear in the investment, come in the stock in work in progress. JV only is to be passed at 10 crore. 9 crore is my reserve for the time being. And on this 9 crore, I'm liable to pay the tax when really goods is sold to outsider. When I construct the building, sell the flat, that time I'm liable to pay tax on 9 crore. Whatever part is sold, then part tax will be there. Fully sold, full tax will be there, and depending upon that. Now, few years back, if I convert stock in trade into investment, that was exempted again. But now, assessment, I think 2020 onwards or 21-22 onwards, that also section 28(4) is amended, and there says if you convert stock in trade into investment, then also I'm liable to pay the tax the day of conversion. Converting investment into stock in trade, I'm liable to pay when goods is really sold to outsider. But from stock in trade to investment, I have to pay tax in the year when I convert it. So that also very important for builder's point of view, we have to keep in mind. Now friends, now we come to the 3 other important sections, section 50C, section 43CA and section 50C to 10. Now they are common for the investor as well as a builder. They apply practically 43C apply to the builder, 50C apply to the, in the case end of the capital gain. 56(2) apply to both. So let us, we will, issue-wise will discuss this and then later on we will come to another topic. Now what is section 50C? 50C says, if I sell anything to anyone as a capital asset, I'm owner of a flat. Let us assume I'm owner of a flat. My ready reckoner value of the flat is say 3 crore rupee. I sell to somebody for 2.5 crore. Then income tax department says I'm supposed to compute my capital gain on the basis of 3 crore. Even I receive 250. Agreement is 250. But stamp circle value or income tax ready reckoner value is 3 crore. So first I have to pay stamp duty on a 3 crore. Second, my income tax calculation also start with a 3 crore. So even I receive 250, income tax will be on 3 crore. Now let us assume for 1 second, I feel I really sold for 2.5. It was a distress sale. I was in need of money and I have not received 3 crore. I received only 250. Then what happened? When ITO raised the question, now after Modi ji has taken over, income tax have simplified it to great extent. Now today, one case come under scrutiny after 400. Then later on, of course, they can reopen, that is different thing. So if my case is not selected under scrutiny, then no question will come. Let us assume my case selected under scrutiny, or later on they reopen. They say your circle value is 3 crore. How you sold for 250? You are supposed to pay tax on 3 crore. Then what happen? I can request the income tax officer, refer this matter to valuation sale of income tax department. And CPWD have appointed all the valuation sale all over India, on big cities. All in Bombay we have full 4th floor is there, 10 officers are there. So they will revalue the property. Once they value the property, and for example they value at 250, that is binding on income tax department. For example they value at 225, then also department cannot reduce less than the agreement value, because 250 I received it. If they value at 275 instead of 3, then 275 also is binding on them. And that officer, the district valuation officer or valuation officer or joint valuation officer or deputy valuation officer, they have power, wide power. Here to make it simple, let me give you an example. One of my client, his name was Mr. Ferreira. They had 7 brother and 4 sister, 11 children. They sold one property. They have many property in Bombay, but let us talk about one property which is under dispute. They had one property in somewhere in Malad. They sold that property. There many illegal tenants have occupied the property, and number one, more than 800% have occupied the land. So he was not able to get a proper buyer. At that time laws were that only. In Bombay, nobody was able to develop where some such things were there. Today, the government is also very serious, and more tenants are there, more potential you have for development. But that time, certain FSI is available, and if you already consume more than that, then you can't construct anything further. But now things have changed today. Now there, what happened? Ferreira was not able to sell. One day he found one builder who agreed to pay him 1 crore 26 lakh of rupee, and he sold the property. Out of 11, 4 persons have died first because they have no children. So 7 persons were legal heir now. So that 1 crore 26 lakh is divided by 7 children. Junior most child was 90-year-old. So all were 91, 92, 94, 95. That senior person. Now what happened? 6 assessments were also completed under 143(1). One case is selected under scrutiny. And that officer asked the question to us, what is the market value as per ready reckoner? So my client was not having any information. He was having xerox copy of some agreement which was not even registered. Earlier what MOU made. So we filed with the officer. Officer taken a certified copy from registration department and provided us. And that time the builder has paid, who purchased the land, has paid stamp duty on 25 crore 98 lakh. That was the reckoner value. Because stamp duty department say we recognize tenant only if you file electric bill, their ration card, their passport, their PAN number, their rent receipt, their agreement, all occupation certificate proof he was occupying, and they were all legal tenant. So they valued at 2598. That time stamp duty was payable only at the rate of 1%. Second day it was amending to 5%. The builder hurriedly paid 1% and closed the matter. Income tax officer say, now I will take the figure of 25 crore 98 lakh. If we take the figure of 25 crore 98 lakh, my income tax itself will come to 7-8 crore rupee, where I sold the property only in 1 crore 26 lakh. So we requested officer, kindly you refer this matter to valuation sale. Matter was referred to the valuation sale. Valuer came personally there, inspected the property, seen all dirty water was going on in the various nalas there, and all the tenant, occupied person, illegal or unauthorized occupant. And after doing all the research, department valuer valued the property at 2 crore 98 lakh. Meantime, ITO had passed the order at 2598. Before CIT appeal, we produced this valuation report. He reduced to 2 crore 98 lakh. Then department filed appeal before the tribunal. Meantime, we've decided to pay the tax and we accepted that. But when department filed the appeal before tribunal, we also filed the cross objection before the tribunal. Because whenever you file the cross objection, you don't have to pay filing fees also. So that is taken independently appeal. So finally, before the tribunal decided in my favor, accepted 128. He said agreement value is 128. Stamp duty value is 2598. DVO say 298. So agreement value and DVO's report difference is more than 100%. Now wherever difference is more than 100%, then if difference is 5, 10, 15, 20%, that is fine. But if difference is more than 100% means all things are abnormal. Either DVO is wrong or stamp duty is wrong or something is wrong somewhere. Finally, my 126 was accepted. So if you fight with a proper documentary evidence, you succeed. So that is called section 50C. Now coming back to section 43CA, same thing is done by the builder. If builder sell the flat, then section 43CA is applicable. Again, whether section 50C or 43CA or section 56 to 10. Up to assessment year 18-19, there was no margin. Whatever agreement value, stamp duty value, difference was to be added. The moment you pay tax on the difference, your cost goes up. Whenever you sell the property, your high deduction will be there. But from 1920 onwards, they have given 5% rebate. If difference is less than 5%, that is to be ignored and agreement value to be accepted. From assessment year 21-22, the 5% have increased to 10%. They say if difference is less than 10%, then it is to be ignored. But I have seen in my practical life, whenever matter in the litigation, tribunal normally take difference up to 15% and they consider. Certain period in the COVID period, they've given even difference up to 20% was allowed. If agreement value is less than 2 crore, if person buying the property for the first time, but that was all over in COVID period only. As of today, we can say difference up to 10% is permitted. DVO's report and agreement value, a difference is less than 10%. Now, sometime what happen? DVO though it will come only when ITO make the addition or give you a so-called notice or case is selected under scrutiny. Normally, we advise our client if rector value and your agreement value difference is more than 10%, then we advise our client normally take the valuation report from registered valuer. So he can inspect the property well in advance. Today I may be selling one land. After 5 years, when scrutiny take place and various things take place, or when cases is reopened, that time what happen? My land may not be there. It may be a building. I may have sold a flat which require heavy repair, but by that time flat has already been repaired. So it is very difficult to later on prove that these were the minus point. So it is always advisable to take the valuation report first before you complete the deal and try to enclose the valuation report along with the agreement. So that is already on the record. So it is easier to fight at later stage. Then we come to section 56 to 10. Now what is section 56 to 10? If you, for example, I purchase a flat from builder. I made an agreement of 2.5 crore. Stamp duty value is 3 crore. Now, as per department, I have earned 50 lakh rupee. And they want to assess me under section 56 to 10. Now, if difference is up to 50 lakh, 50,000, then of course no addition is required. But now in the present situation, all value has gone up, 50,000 is nothing. So difference he want to add. Now, assuming I myself add the difference, then naturally my cost will go up. Whenever I sell, I will get the deduction. Or if I dispute, my property is worth only 2.5 crore. I don't go on the stamp duty value. Stamp duty value determine the value of the whole area. And in one building, only ground floor may have different value, 5 floor may have different value, high floor may have different value, front side may have different value, back side may have different value. Shop, main road have different value, inside compound may have different value, where department consider all at par. So I can take the valuation report. I can request the ITO to refer to valuation sale and go on fighting with the department. But if amount is small, I want to agree, then of course my cost will go up. Or the 5%, 10% what I told you, that is always accepted. But if I receive some item from my relative, like for my brother sale to me, agreement value is, my ever agreement value is only 2 crore. Stamp duty value may be 5 crore. But again, the relationship come in the between. 7-8 relations what is given in the 56 to 10. If you have a transaction with those 8 relatives, then of course you are not liable to pay the tax. Difference will be taken as a gift and there is no problem of income tax or any other thing. Now coming back to the redevelopment. In Bombay, of course, I don't know other part of the India, but in particular in Bombay, every third building is going under redevelopment. And why it is redevelopment is very popular. I told you earlier there was FSI rule was there. What is constructed, you can't construct more than that. For example, my plot area potentially is 5,000 square feet, I can construct. I've already constructed 6,000. Then no potential was there. If I constructed 3,000, then of course 2,000 was allowed. And if I already constructed 6, then I to the revised plan, it will come only 5. So everyone will get less value. And in Bombay, particular Kalba Devi, Girgam, Opera House, Kulaba, it is so congested that redevelopment may not be possible because there is no surround area. If you make a new building, then you have to leave 15 square meter in front, 10 meter in back, 20 meter in left, right. The whole plot is finished in that area what you have to leave. And then open garden. So now at least what happened? Government is every monsoon, few building fall. Many person dies. Minister come. Earlier period they used to give lecture and go away. But last 10-15 years they are very serious. Government of Maharashtra is really very serious, and they made everything possible. They say already area potential is 5,000 and you already constructed even 10,000. Then you can construct 10,000, give to the old person, you construct further 10,000 and sell. So you can recover your cost. Person even occupying a 80 square feet area, and redevelopment will get minimum 400 square feet area. Today he may be on the ground floor or maybe first floor, he may get flat on 39th floor. And that again free of charge. The builder cannot charge him anything. So there are many potential, and again 4-5 building can come together and they can do cluster development. And if you do cluster development, FSA of 5-6 is also available. If you are having constructing a school or hospital or public place, then even 7-8 FSI is available. So today things are completely different. And when things are very simple from government point of view, our income tax department is there, how to create complications. So day by day they know all the complications. So we will deal with few complications in case of a redevelopment. Now redevelopment can be of two types. One, there is a landlord, persons are a tenant, and builder is developing the property. Second can be there is a cooperative housing society, builder come in the picture, he construct, and flat owners are the third affected party. There can be housing society themselves construct. That is another concept called self-development, which is also very popular nowadays. One of my friend in Bombay, Mr. Ramesh Prabhu, is very active in that area. Self-development, he said, my builder make a profit, let society make that profit. So that is also going on. So let us discuss what are the main issues coming that. The first item, when redevelopment take place, let us talk about the cooperative society. I have a flat of 1,000 square feet. My building is going under redevelopment. So there is a society, me, and we call a builder. The builder can be any reputed builder, because if you give to an ordinary builder who is not experienced, tomorrow he may not complete the building. And I may be outside of my flat, and new flat may not get on for another 10 years. So that another area. So we select a reputed builder. The builder make the agreement with the society. I can take a consent of all flat owner. So that part is separate documentation. But now let us say, what is my tax? Now in this case, what happened? Now let us assume that I have a 1,000 square feet flat. I am ownership flat. I am holding sale certificate of the society. I have right to use or occupy my 1,000 square feet on 10th floor or whatever the floor I am occupying. I pay monthly maintenance charges. Monthly maintenance charges. And building is under redevelopment. Let us say instead of 1,000, I am getting 1,500 square feet area. So if my asset is long-term capital asset, I am holding that property for more than 24 months. If I am holding exactly for 24 months, it is short term. Holding for 24 months and 1 day, it is a long term. So let us assume that my long-term capital asset is there. And I am holding the flat for last more than say 5 years. My building go under redevelopment. Instead of 1,000, I get 1,500. I am holding flat. I am going to get flat. Now under section 54, if I have purchased any property, I make a capital gain, for example, today. 1 year before I purchase something, 2 years after, within 2 years after I purchase something, or within 3 years I construct something, then my income is exempted. When I say construct something within 3 years, it means I get my ready-made apartment is ready within 3 years. In Bombay, Delhi, Calcutta, Madras, it may be difficult to construct your own because of government approval. So we buy from a builder, and that is taken as your own construction. So let us assume that in my case here, I have a flat, I give under the redevelopment, I am to get 1,500 square feet. So builder has to give me within 3 years. That is the condition. If builder give me after 3 years, I may not get a deduction under section 54. That there can be one complication. So builder write in the agreement, I will give you within 3 years. And then he is not giving, then number of judgments are there for the support. But builder has committed to give within 3 years. On radar side, he given a date of possession within 3 years. But if builder is not giving because of certain reasons, what I can do? I am a small man as compared to builder. And court have taken a liberal view. First order has come from Pune Tribunal. Later on it come from many high court also. And a liberal view is taken and the exemption is given to the flat purchaser. Now question comes, today my flat is worth 1,000 square feet. I purchased in 1978 for say 1 lakh of rupee. 2001 value of that flat is say 1.5 crore rupee. And when I get the flat after 3 years, it may be worth 15 crore rupee, 1 lakh rupee per square feet, 1500 square feet I'm going to get. Now, what is my capital gain? One view is that in case of redevelopment, capital gain is not applicable. Because I've given my old flat, I got a new flat. But I don't agree with this. This is not the correct view. Section 54 is there, 54F is there, 54, all various sections are there. So that view, I don't agree. But of course, if tomorrow court decides something, you given your old flat and you got new flat and no tax is there, then the position will be different. Today, as on today, after 3 years, within a 3 year, I'm going to get flat worth 15 crore of rupee. Now, what is my cost? Original cost is only 1 lakh. But 2001 value, 1.5 crore, 15,000 rupee per square feet for 1,000 square feet comes to 1 lakh, 1 crore 50 lakh. So that is my cost. So what is my gain? 13.5. Now 13.5 may under section 54 or 54F, 10 crore is free. So out of 13.5, 10 crore I deduct. Remaining 3.5 crore, I have to pay tax at the rate of 12.5% plus surcharge, whatever is there. So roughly 14.95% tax will come. Now, how to avoid that? Today, I can give gift of my 50% or 40% or 30% gift to my wife. Wife income is normally club. But here what happened? It is deduction under section 54. My wife first will claim the deduction. After that, something is left over will be added to me. Again, in case of my wife, what is my cost will be taken in my wife's cost. So half flat I am giving, my cost is 1 crore, 1 lakh, her cost is 50,000. My value is half 1 crore and 50 lakh on 1st April 2021. Her cost will be 50%, mine will be 50% later on. So my date of acquisition is her date of acquisition. My cost is her cost. Even she is getting gift from me today only, but it still will be taken as a long-term capital gain. So by making such planning, giving gift to son, daughter, daughter-in-law, or wife, or depend upon case to case, one can study and do a proper planning well in advance. Second amount what I get is hardship allowance. Because for 3 years my building construction will go on. I have to shift somewhere else. My office will be disturbed. Today I am coming regularly from one place to another place for the last 30-40 years. Suddenly I have to shift somewhere else. My children's education will be different, will be affected. Everything will be affected. Where I'm settled for a long time, my neighbor, everyone knows me, but now I have to shift to a new place. So that is called hardship. And hardship is not purchased, it's automatic. And hardship again cannot be counted in rupiah and paisa. If one hardship to my peon may be worth 5 lakh rupee, same hardship to me may be worth 50 lakh rupee, same hardship to Mukesh Ambani may be worth 5,000 crore rupee. And there is no cost. So there is a Supreme Court decision of BC Srinivasan Setty's case. Whenever there is a no cost and you receive the money, then hardship allowance also is exempted and not liable to tax. When section 55 was amended somewhere in 2022, we all were in impression that hardship also will be taxed under section 55 too. But now later on, Bombay High Court decided recently that hardship allowance also no tax. Of course, there are 5 exceptions are there: tenancy, goodwill, road permit, loom permit. Such item will be taxable, but hardship still is not counted, so it will be exempted. Again, builder give me rent for 3 years, you have to shift somewhere else. So rent I may use, may not use. I already have another place to stay. I go there and stay. Whole rent is kept with me. Earlier we used to take a view, if I not spend, I have to show income from other sources. I have received from the builder 2 lakh rupee, I spend only 1 lakh, 1 lakh will be taxable. If I spend more than 2 lakh, then of course deduction will not allow, 2 lakh will be my cost. But recently again in Bombay High Court had decided number of cases that if rent received, even spent, not spent is not relevant, that also is exempted like hardship allowance. So these are the situation whenever there is a residential property is there on ownership basis. Let us take a situation, I am not the owner, I am a tenant. Now I am a tenant in one building. Say I am occupying area of only 200 square feet. Under redevelopment, builder is giving me 600 square feet. So my cost is not there. Again, tenancy is not it is a capital asset, but it is not a residential house. Because under 54, residential house is covered. It can be bungalow, it can be a flat, it can be any apartment. But as far 54F is concerned, other than residential house is covered. So it can be shares, jewelry, tenancy right, or any other right. Now here 54F will apply. What is the condition of 54? 1 year before, 2 year after, and 3 year on construction. That is there. If I not bought before filing the return, for I make a capital gain today, I have to file my return by July 30, 2026. If I purchase the property by that date, no problem. If I not purchase by that date, then I have to put that money in a capital gain account. But here no money is received. Builder is giving me flat only. So it is already indirectly invested. But under 54F condition is, if I have no house of my own, and this is my first house which I am going under redevelopment, will be exempted under 54F. Limit is 10 crore rupee. If I already have a one house, this is my second house, then also it is a free. If I already have a two house, I cannot have third house, then what house I am going to get? I have to pay tax on that item. So this we have covered residential part, society, as well as tenancy right, ownership as well as tenancy. Now let us take assume that my building is a commercial building. Today I have a 1,000 square feet office. Builder is giving me 1,500. Ownership building. Then 54 or 54F ka 10 crore limit which is exempted will be not allowed. Whatever area I get, minus cost, I have to pay tax on that, long-term capital gain, in case of a commercial property. If I'm a tenant of a property, I'm getting now property on tenancy basis, then of course no problem. But government rule is that if tenancy building is going under redevelopment, then builder or society have to give me on ownership basis. So if I get having office of 1,000 square feet, after redevelopment, I may get area of 1,000 square feet or even less or more or whatever. Then what is the rectal value of that? On that I have to pay tax. So this was roughly something like whatever was available in a redevelopment of the property. Now let us come to the another area. Sometimes society also get a corpus, hardship corpus. What we get is known as hardship allowance. What society get is known as a corpus. Same principle applied to society also. Corpus amount also is not taxable because there is no cost to that. Like this, they give shifting allowance, transport charges, or small amount. So if you spend, not taxable, not spend, normally we used to add in the income, but same line of the rent, that also can be taken as a exemption only and not taxable. Now friends, we come to last item, rent deemed income. If builder has completed, got the purchase occupation certificate, what government want, builder must construct the building, sale as early as possible. Earlier one view was that rent income is normally comes under income from house property. And when rent is generated, when you have some investment or fixed assets and give on a rent. But sometime years back, maybe 15 years back, law was amended. Even builder is holding stock in trade and he give property on a rent till he sell the property. Then also that was assessed under income from house property. Then section was amended, even builder has not given on a rent. Still it will be taken as a deemed rent and you are supposed to pay tax on that item. Then of course objection was raised, government has withdrawn their circular also later on. But again within 4-5 years back, again they brought that. And today, after receiving an occupation certificate, if 2 years are over, 2 financial years are over after OC, so excluding that financial year in which OC received, excluding 2 years, if builder is not sold, then whatever rateable value fixed by the municipal corporation, we have to take that value as a fair rent and we have to work out our after deducting municipal taxation 30% rebate, one has to pay the tax on that item. So whole idea of the government is the builder must sell within 2 years so person can occupy the property. If builder is very rich, he want a price of particular amount, I want to sell at 30,000 rupees per square feet. Now, for example, he's not getting that offer, then he hold on because he got the capacity. So government want, okay, if you are holding on, pay deemed rent also, income tax on a deemed rent. So that is another section was there. If builder, I'm making a joint venture with the builder and builder agreed to pay me 10 crore rupee on spot and he will give me say 40% area when he will give me when occupation certificate received, that day I'm liable to pay the tax. But today he's giving me 10 crore. As on today on 10 crore, I don't have to pay any tax. It will be carried forward. And when I'm paying tax on OC, that time this 10 crore also will be added there. But meantime, person who is paying me 10 crore, developer, he will deduct 10% TDS and he will pay to the government. He will give me a certificate. So in my return condition, always we know, if I show the income, then only I can claim the TDS. The income I am not showing, income I will show on the OC. So this TDS also will be carried forward. And the year when I show the income, it will be allowed. Now under 54, if I'm buying a property, new property, other than redevelopment, then whenever I pay money to the builder or an investor or an old person who's selling property to me, 1% TDS will be applicable. that 1% TDS I have to pay end of the next month. For example, in month of May, I buy a property and I buy property for say 5 crore. So I have to deduct 5 lakh rupee from his amount. 5 lakh I will hold, but I have to pay before 30th of June to the government account in certain form, 26Q1, whatever forms come, and automatically after 15 days after payment, some certificate will be generated, which I can hand over to the seller. Or otherwise, it will appear is 26AS, so he can also verify that. If if I'm buying a property from a non-resident, person is a non-resident, but Indian origin. If person is a completely a foreigner, we say Gora person, USA citizen or completely a foreigner, then of course he cannot sell or buy without RBI approval. But I am buying from a person who is of Indian origin. When India and Pakistan all were together, that time he was staying here. After that, he shifted somewhere else. So he is known as Indian origin. Now, if he Indian origin or after partition, he came from some Pakistan to India and then he settled in Jakarta or USA or UK or Dubai or somewhere else, that person is no. So they don't need any approval from the Reserve Bank of India. They can hold the property, sell the property, but they cannot deal in the property. For example, I am a non-resident. My father passed away. I inherited property in India and I'm one of the co-owner with my brother. So naturally, I can sell that property. I can take up to $1 million outside India every year out of that proceeds. And but India, whatever gain I make, I'm supposed to pay the tax. Now I'm a non-resident, so government have no control on me. So what rule is, whenever somebody buy property from me, when he make payment to me, he's supposed to deduct TDS. If short-term capital gain, short-term will depend upon if I purchase only within 2 years and selling it, and my source is explained from where I paid that to within 2 years, then of course it will be taken as a short-term, and I'm liable to pay the tax. If I brought the money from foreign country, I can sell, pay tax in India and take the money. But that time my money what I brought from outside India will be converted into rupee. When I sell, again it will be converted to dollar, and whatever difference amount I have to pay. But let us say I inherited property from my father. My father has purchased in 1950. My father passed away in say 2001. I inherited property now and I'm selling that. I'm getting property now. But even then it will be taken, I'm holding the property right from 1952. And accordingly, it will be worked out. But person who is buying from me, let us assume he is paying me 5 crore rupee. He will deduct, once it is established long-term capital gain, he will deduct my 15% now. Earlier it was 23.92, now it is 14.95. He will deduct from me, he will pay 7th of the next month to the government and give me a certificate. Or it will appear in my 26As. If I am not holding PAN card, or even the person who 1% applicable was there to resident, even he is not holding PAN card, then TDS will be 20%. Otherwise 1% and 12.5% plus surcharge to 15%. Now the 15% who deduct, now let us assume I will tell the income tax officer, okay, by 15% is the maximum rate of tax, 14.95, including education cess, surcharge, this, that, everything. So why you did my cost is there something? My father had purchased in 51, 2001 value is there. That cost is there. When indexation was allowed, further indexation was there. So government made one section 197. If you feel your tax will be lower than that, you apply in form number 13 for lower TDS certificate. Lot of earlier corruption was there in issuing the certificate. Now Modi ji has made that also online. You make an application, file all the detail, and online within 30 days it will come to you. Or if it's not coming, then some objection will come. So that is also very good facility for non-resident. And there what happens, they give only certificate for the lower TDS. So whatever figure they write, for instead of 12.5%, they write 2% or 1%. If they write 0, then matter end. But sometimes 0 may not be there. They want to keep on the SSC, control of SSC. So they will write something 1% or maybe 0.1% or 0.5%. Then in that amount, you to add surcharge. 15% surcharge of that amount, 15%, whatever comes. Then whatever total comes, you add 4% medical and education cess. And accordingly work out and pay the tax. Because normally we deduct only that percent what is written in a certificate, but certificate is only for the tax, not for the surcharge and TDS. So on that figure, we have to make some working and accordingly pay the tax. Now, friends, we comes through. Now, friends, we come to the main point of earlier. Now we dealt with the mixture point where a builder was involved, capital gain was involved. Now let us go through the capital gain part only. Now, what is the capital gain of two types, short term, long term, less than up to 2 years, more than 2 years, that we all know. I already told you stock in trade is not capital asset. lost in fire is not capital asset. Compulsory acquisition is not a capital asset. Development land sold by the individual HUF is not a capital asset, but it is later on we have to pay the tax. And there, of course, some places we have to pay when money is received. Some places it is completely exempted. Some places at the time of occupation, which we will discuss in detail along with the builder. So we will not repeat that. Let us take a new topic. Now coming back to the last final amendment, I told you three important amendments were there. Assessment year 18-19 onwards, 45(5)(a) was amended. Assessment year 24-25 onwards, 10 crore ka limit have come under 54 and 54F. Here, let me give an example to make it more clear. One of my client has purchased land in Delhi in 1947. 11-acre land he purchased at the rate of 100 rupee per acre. So totally paid 1100 rupee. Land, no trespasser encroachment was there because his uncle was staying there, so they could have good control of the land. Now the main person who purchased, he passed away. He had 5 children, 3 sons, 2 daughters. Now both daughters settled in USA, one in USA, one in Dubai. So, and they are well to do. So they say, we don't want anything. We are gifting to our brothers. So now both sisters are given to 3 brothers. Now finally 3 brothers left over. 3 brothers divided land. Everyone got 3.75 acre roughly. 3.8, 3.8, 3.8 or maybe 3.75. Now first brother has sold the land in assessment year 22-23. He got for that land 80 crore of rupee. His cost was 375 rupee. If not his, even his father's cost. He got 80 crore. What he has done? 80, and this was the sale of a land, not sale of a house. So section 54 was applicable. He was not having any other house other than one another house. So he purchased second house in Mumbai, invested whole 80 crore in one property, and claimed deduction under section 54F and not paid a single rupee by way of a tax. Second brother sold in assessment at 24-25. Now he's, because market is further gone up. So his 3.75 acre, he got amount at the rate of 100 crore rupee, total 100 crore rupee got. Now out of 100 crore also he invested 50 crore in the bungalow. But meantime law is amended, his 50 crore was not allowed, only 10 crore was allowed. So even invested 50 crore, he will get deduction of only 10 crore. 54F again cost is not permitted. So out of 100, 10 is allowed. Rest over 90 crore. 90 crore mein pro rata cost was allowed. Now the 2001 value of the whole property was 1 crore 50 lakh. So his share have come to 50 lakh. 50 lakh mein again 10% is invested among deduction was allowed in 54F. So it was taken at 45 lakh. So 90 crore minus 45 lakh cost was taken. 45 का indexation मिल गया और so roughly again say another 2 crore was allowed. So 90 minus 2 is 88 crore. On 88 crore he paid income tax at the rate of 23.92%, which roughly work out to 21 crore rupee. So he paid the tax of 21 crore rupee, whereas earlier brother had not paid a single because invested everything in the property. Second brother even invested 50 crore but allowed deduction of only 10 crore and rest was taxable. Third brother is selling now, most probably in July 2025. Price is further gone up. He is going to get 150 crore. Now what is his option now? Out of 150, 10 crore he will get under 54F. Whatever money he invests, 140 will be taxable. Indexation will be not allowed. So his original cost of 2001 will be allowed, which work out to roughly 50 crore, 50 lakh. So out of 140, 50 will be allowed. So 1 crore 39 lakh 50,000 will be the 1 crore 139 crore 50 lakh will be gained. On that he will be paid 12% plus surcharge, etc., roughly 15%. His tax is coming less than 20 crore. Person who got 100 crore paid 22 crore, 21 crore tax. Person who got 150 crore will pay only tax of less than 20 crore. Because of concession is given on this last budget, 22nd of July 2024 is very cut-off date and very, very important date. Now, what are the important amendment in that one? First, what are the originally amendment plan? No indexation allowed. You can claim maximum value of 1st April 2001, provided you purchase before that. Rate of tax have reduced from 20% to 12.5%. 20 may also used to add surcharge education cess, that here also used to add. Lot of how cry was there. They say, we have purchased the land, we were in impression, we'll get indexation. We were in impression, this deduction will be there, that deduction will be there. The government came with certain rider. Rider, what is the rider? Rider is also very complicated. Normally we feel we can compute in both the way, old system, new system, and we can follow one. Actually, end of the day, that is the final result. But actually working is like this. First, you to compute as per the current scenario. 12.5% plus whatever amount you want to pay. No deduction under 54, no deduction under 54F. And simply you to work out original sale value minus cost, 2001 value or cost, whichever is lower or whichever is higher, sorry, and whatever gain it comes. One option, pay straightway 14.95% on that and close the matter. Now let us assume I want to claim indexation. Then I can claim the indexation 2001 to whatever indexation is comes, and then I work out because of the old system, because that I will apply only if I purchase the property before 22nd July 2024 and sold after 22nd July 24. If I purchase before 22nd July 24, sold also before 22nd July 24, then of course new provision will not come in the picture. Old system will continue. I purchased before 22nd July 24, sold after 22nd July 24, and it is long-term capital asset. Then I have two options. New system 14.95% tax में लगा के खत्म करूंगा. और second option, I make the capital gain, claim indexation, leftover workout tax at the rate of 23.92%. And if I see a low tax is coming less than the 12.5% of the system, then whatever saving I'm making here, that much I can deduct out of this. Because return form, no provision is there about the old system. But you have to make a separate working and reduce the tax payable from this amount, and balance you can pay. If you are claiming under the old system, claiming indexation, then 54F deduction also will be not allowed. If you want to claim deduction under section 54 and 54F, then you have to compute under the new system. New system, you have to pay the tax. In old system, you work out the capital gain, don't claim indexation, and then 54F can be claimed. The moment you claim indexation, then this item is also out. I'm talking about purchase before 22nd July 24, sold after that. If sold before that, there is no complication. So many development has taken place because what's idea is, if you are liable to pay lower tax before the amendment, then you should not be suffer. You must get that benefit of that. And accordingly, it is amended. So, and if you are claiming indexation, then 54 deduction will not there. If you are not claiming indexation, 54F will be there. So one can work out in all the way, and whatever you want to claim, you can claim. So that was another important amendment which has changed the whole picture. Then of course 54EC one section is there. What is that section? If I sell a capital asset and after claiming deduction of cost up to 50 lakh of rupee, I can invest in certain bond. Government of India's rural bond and the Hoodcore 3-4 bonds are there. Money will block for 5 years. I will earn interest at the rate of 5% per annum. Interest is taxable. But 50 lakh, what money I am blocking, on that amount I am not liable to pay the tax. Earlier, if you go 10 years back, law was that if I sold property somewhere in January, so I can invest within 6 months by June. I was allowed to invest 50 lakh before 31st March, 50 lakh after 31st March. But that is not possible now. Under 54 also, 54F also, earlier I was allowed to invest the money anywhere in the world. I can buy the house. Wedding was there, I have to purchase a house. Lekin later on, that also law is amended. I have to purchase house in India only. If I buy something in Dubai or USA or UK, will be not allowed. So various, from time to time, many other amendments have come. If I not invested before due date, I can block the money in a capital gain account. Now here very important, I sold one property. My idea is to buy a flat. Before due date of filing the return, I invested money in the capital gain account also. First I put in a saving account, interests are more in FD, so saving to I transfer to FD, capital gain FD, not ordinary FD. Capital saving account. Next Bank we can open the account. Now condition is that within a 3 year I must purchase the property from a builder. If I want to show the construction, then at the time of purchase, my building is not ready, it is under construction, and within 3 years, building is ready. If I want to buy within 2 years, then ready-made house in old building also I can buy. If I already purchased something earlier, then 1 year was allowed. But let us take a situation. I started construction work of a bungalow in Rajasthan in 2015. Work was going on very slow. Now in 2025, I am making a capital gain of say 5 crore rupee. And within 1 year, my bungalow work will be over. Or within 3 years, my bungalow work will be over in Rajasthan. And my whole investment is there up to 5 crore. Whatever money I spent from 2015, 16, 17 till today, and what I'm going to invest in another 3 years before bungalow get completed, all amount will be allowed to me, deduction under section 54 or 54F or whatever section is applicable. So 1 year before, when I say buying a property, means it is not buying a land or buying a simply a half constructed building. It should be habitable house. There should be kitchen, there should be a bathroom, there should be entrance, proper habitable house. And it should be habitable, occupation certificate received. Many places, they panchayat. They don't issue occupation certificate. But many places, municipal corporation, they don't issue, my Rajasthan, my hometown, there is no system of occupation. The owner only decide whether habitable or not habitable. And we can shift there. So wherever condition is there, municipal corporation or greater municipal corporation, where the population is more than 10 lakh, there some system is there, then they have to obtain occupation or completion, whatever is there. Again, in this case, buyer and seller both are resident. Then we already discussed TDS 1%, otherwise 23%, or now 15%. So that is to be taken into account. So section 54, here important, if I put money in a capital gain account. Now my 3 years is over. I have not like flat from the builder. Now I can't buy. Condition is that 1 year before, 2 years after ready-made house, within 3 years under construction from a builder or own construction. If I'm buying from a builder at a time of purchase, after 2 years if I'm purchasing, it should be under construction, and within 3 years it is ready. If I'm buying it from a builder also ready-made house, then condition will be 2 years, not 3 years, even it is my first purchase. So 3 years I enter in 3 years, then when the time of purchase, it should be under construction. And 3 years my occupation certificate is received. Now let us assume my 3 years is over. I have not purchased anything. Then what happens? I can withdraw the money after 3 years from the capital gain account and offer to tax in the year when I am withdrawing. Interest will be taxable every year. But when I am withdrawing the money after 3 years, that year I can pay the tax. Question comes whether tax of 20% will be applicable or 12.5% will be applicable. At the time of sale, what was the rule? If I am liable to pay tax of 20% plus surcharge, then that will be applicable. If that point of time I am liable to pay 12.5% plus surcharge, then that will be applicable. If earlier I was liable to pay 20% plus surcharge plus the execution sales me 23.92, and today I say I will pay only 15% with surcharge and everything, will not do. Same rate of tax will be applicable. Now friends, we have covered section 54, 54F, 54EC. Let me take certain issues which let me make it very clear, because 54, 54F, 54EC, 50C, 43CA, 56.210, every day it comes to our client bring with such problem. So certain issues, what judgment may, what I will not quote the judgment. I've already forwarded one note of 81 pages to our institute, which they will give to you or put on a site or whatever their system. But let me give you what are the issue and what is the problem. Profit on transfer of house property used for residence. Now, what are the judgments? If I buy a part of a house, for example, I made a capital gain, sale of property or other item. My wife and me, we both are 50-50. My capital gain is such, if I buy 10% from my wife, so I become 60%, she remain 40%. And she will pay capital gain tax, whatever is there, gain I'm giving money to her. So, such part of purchasing, part of house also is considered, is also permitted. Release by the another person. Let us assume that I am a jointly purchased this property with Vishnu. By one property I purchased, where Vishnu Agarwal is 50% owner, I am 50% owner. Now let us assume the situation that either he is surrendering me or I am surrendering to him. I am releasing my right, Vishnu, you keep this property, or he surrendered in my favor. We don't want to continue with partnership or 50-50. Now he surrendered his right to me and I pay him the money. That also is taken as a purchase of property, and if I made any other capital gain, will be allowed as a deduction. Or for example, I am surrendering in his favor and he is paying me the money, then whatever capital gain he made, he will get the deduction of that. Then I purchased an old bungalow invested the money. Then that is only ground plus one floor. I want to construct second and third floor also on that bungalow. Spend the money. Within 3 years, I invested the whole amount, whatever purchase of the old bungalow, whatever money I invested for construction, everything will be allowed as a deduction to me. Exemption under 54, land only sold. Now, if I sold the land and I want to claim deduction under 54, will be not allowed, because if I sold other than a house, then section 54F is applicable and not section 54. So if I have two houses already and sold the land, then I will not get the deduction. I have to pay tax on a sale of a land. But in case I have one house, I can buy second one also. If I have no house, by selling land also. But section will be 54F. Basically, 99% 54 and 54F are identical. Except one condition, under 54, if I have 100 flat, want to buy 101, no issue. Under 54F, if you already have two, I cannot buy third one. That's the basic difference and that's the condition. Then successor is entitled. My father sold some property. After that, he passed away before he purchased the property. We children comes in his shoes and we invest the money on his behalf. He is no more. We invest money in his behalf, either in our children's name or whatever estate name, deduction will be allowed. So legal heir can also invest. Even the 50 lakh bond, 54 EC. My father sold certain property in his lifetime. He invested the property. Normal course, he cannot withdraw within 5 years. Every year interest will come, he's supposed to pay tax on that. But in case he's passed away, then children can withdraw whenever they like without paying the tax. Then purchaser of limited interest, I already told you half percentage, 10%, 20%, 30% also can be purchased from any other person. Then construction in another property. Let us assume my wife is owner of a land in Pune. I made certain capital gain in Bombay. I construct one bungalow on her land, which is in Pune or in Bombay, anywhere. I will not get the deduction. But I purchased land today in name of my wife, or name of my daughter, or name of my daughter-in-law, and construct there. My name is not there in that land. My wife's name is only there, or daughter's name is there, or daughter-in-law's name is there. I will get the deduction. Since already owner of a land and I construct, I will not get deduction. I purchased today in her name by paying the money from my bank account. Even my name is daughter, still I will get the deduction. So there is a very thin line, buying a new property or using the old property. Construction in another property is not eligible. The house of the firm, one firm was having one owner property of ownership basis, which was used by the partners and partners' residence. Later on, partners have purchased from the firm their property, sold to outsider. All partners got the money. They invested in buying another house under 54 or 54F. Land was sold or house was sold to 54. I told disallowed. You purchased from the partnership firm only 6 months back. So it is a short-term capital gain and we will not allow deduction under section 54. Courts have decided partnership firm is not a legal entity. It is only taxable entity. Like a company is a legal entity. Company owner of a certain property, then owned by the company only. Company is a legal person. Partnership firm is not a legal person. So period hold by the partnership firm for last 10 years or 15 years or 20 years, whatever, will be counted for the partners also. A partner is holding for that period. So that period plus 6 months will be the holding of the partner. And accordingly, deduction under section 54 was allowed to the partner. There can be, I told you, both purchase and construction. I purchased old bungalow, constructed further, possible. Old bungalow destroyed, constructed new one, possible. Purchase certain right jointly with my wife, brother, sister, all. We 4 brothers purchased together. I want to invest my capital gain there. My brother, they have their own money. Still, I will get deduction. So all combination is permitted. I already told you my construction started 15 years back. So even constructed whenever it started, it should be completed within 2 years. If ready-made house, 3 years within under construction. Delhi Development Authority issued one, in Delhi there is another system, because the whole question came whether I purchase, what happened there, what happened, Delhi Development Authority allowed the plot. Before they allowed the plot, there was some system, some cooperative society was formed. One plot was allotted to a cooperative society. Society make a few members, take some money from the members. After taking the money, they issue share allotment, share certificate to the member. Society receive further sum from the member, purchase some land, and allot to the flat purchaser. Now, what is the date of purchase? Society was formed, say, let us say 2016. Shares are allotted to member in 2016. Plot purchased by society in 2017. Building constructed, let us assume, in 2018. And flat owner want to sell the flat in 2019. Short term or long term. Like in Bombay also. Many times builder make the building, give us the possession, then he form the society or a company or condominium. Many times builder is in the black front, he become promoter, form a society first. Purchase a land in a society. Society construct the building and allot to flat purchaser. In whenever society is formed first, then date of purchase of a sales certificate, date of your purchase, and not the date of possession of the flat. If society allotted sales certificate to me in 2016, and I become member of the society in 2016, I'm holding the sales certificate right from 2016. Later on, whatever happened, not relevant. I want to sell the shares in 2019. And because of the shares, when I sell, somebody will have right to use and occupy the property. Because of shares, I have right to use and occupy the property. So it will be taken as a long-term capital gain and not short-term capital gain, because 2016-19 3-year period was there. Now it is again a 2-year. So date of allotment of share, date of sale of share, more than 1 year, more than 2 years, it will be long-term. So specifically, Delhi Development Authority, Central Board of Direct Taxes issued circular number 471, and later on 672, another circular came, which was confirmed by the Delhi High Court in number of cases, and RC Sood, very famous case. So in my note, you will get all the judgments. I will not bother you just now with that. Then, where an SSC who own a house property sold the same and purchased another house property in the name of wife, deduction will be allowed. Because in Hindu community, there is a customary to buy the land in name of a wife, property in name of wife, in name of a daughter-in-law, in name of a daughter. So, investment is made by me, but purchase in their name also is allowed. And there are many judgments on that. Non-resident Indians sold property in India, purchased in UK, I already told you, not allowed. Earlier it was allowed up to assessment year 13-14, after that not allowed. Whether I can buy one property or two property. Up to assessment year 15-16, you are allowed to buy more than one property. There is no limit of two also. Because section wording was there, they said SSC make any capital gain or sell a house, can buy a house. Normally when it is written a house, we assume there is only one house. But court have decided A means not one. A can be more than one also. It is simply grammatical A. So A is not representing one. So from 1617 onwards, law was amended, and they say one property. A was removed and one was substituted. So up to assessment at 15-16, more than one was allowed under 54. From assessment year 16-17, only one property is allowed. The section is very clear. The one means one only. One, you cannot say more than one. A can be interpreted in different way. Again, in somewhere in 2022, law is amended. If your second property is investment is less than 2 crore, then once in a lifetime, person can buy second property also. I made a capital gain of 10 crore. I already purchased one house of 8 crore. 2 crore is left over. I want to buy another holiday home at Pune or maybe Bangalore or somewhere else. I can do that and I can buy, but condition is that amount should be less than 2 crore, and once in a lifetime only I can buy. And that amendment came in Finance Bill 2019 with assessment year 2021. From 1617 to 2021, 1670 to 1920, only one property. Before 1617, more than one property. After 2021, 1 plus 1 less than 2 crore. And the Delhi High Court also decided in the case of CIT versus Bharti Mishra. So that, of course, you can get from my note only. Karnataka High Court also confirmed that. Capital gain on transfer of land used for agriculture purposes. Now, actually, that is also very, very important. Whether agriculture in land is taxable or not taxable. Compulsory acquisition, we have discussed, is not taxable. As far as agricultural land is concerned, let me tell you very clearly. Earlier law was, If I have a agricultural land in a rural area where population of village is less than 10,000 and it is 8 kilometers away from municipal corporation, it was exempted, not liable to tax. Land should be agricultural land in government record. Of course, many judgments have come that if water is not there, agriculture product was not there, cultivable land is not there, then it is not to be allowed. But finally, end of the day, in summarized way, I can say, if land is agricultural land as per government record, and population of that village is less than 10,000, area distance from of that area from municipal corporation is more than 8 kilometers. Now, how to take the area population? 2011 mein census was there. After the census is not there, go to the search on the Google. You will find what is the population of that place. If there is a panchayat, there has to be population less than 10,000, because more than 10,000 the municipal corporation come in the picture. But still we have to take the exact figure. How to take area, distance. Now again, now you to take distance as per the crow fly, aerial distance. Now earlier to how to take aerial distance, either person will go by road or car or train. But now because of various things, research, aerial distance can be counted. So aerial distance is less, more than 8 kilometers from nearest municipal corporation, then 100% tax is no tax, it is 100% free, there is nothing to worry. Let us take a situation. Municipal corporations are expanding. In Bombay also, there is a place called Virar and Vasai. There earlier, Vasai and Virar itself was a panchayat. But today they have covered more than 400 villages near the Virar Vasai, and they are part of Virar Vasai Municipal Corporation. All municipal corporation expanding. Pune, Nasik, Aurangabad, Solapur, Kolhapur, everyone is expanding. Nagpur. So you have to first take, because panchayat and rural village is going away and away and away. So now system is, first system is there, 8 kilometer, 10,000, that is there as it is. Further benefit is given to businessman. If your land is situated 2 kilometers away from municipal corporation and population of that municipal corporation is less than 1 lakh, more than 10,000, less than 1 lakh, so 10,000 के नीचे तो बनेगा भी नहीं municipality. So less than 1 lakh, municipal corporation population is less than 1 lakh, land is situated 2 kilometers away from municipal corporation as per aerial distance, then rural land will be exempted. Within 2 years, taxable. If population of municipal corporation is more than 1 lakh, but less than 10 lakh, and land is situated 6 kilometers away from municipal corporation, again aerial distance, then no tax. Within 6 kilometers, tax. If municipal corporation area population is more than 10 lakh and situated 8 kilometers away from municipal corporation, then again no tax. And first clause is already there. Within 8 kilometers, of course, there will be tax. And first clause is already there. Population of their village is 10,000. 8 kilometers away from municipal corporation, then again no tax. So agricultural land, sale of agricultural land, if fall in this category, you are not liable to pay tax. If you not fall in category, then of course we have to pay capital gain tax on that. Compulsory acquisition, very clearly we discussed, not tax at all. Now there was a scheme called capital gain account scheme. I told you after 3 years if you withdraw from the money, you have to pay. Or let us say I put 50 crore rupee in the capital gain account. In the, of course, now let us say 10 crore only, because 50 crore the old story hoga, 10 के ऊपर तो deduction भी नहीं मिलेगा. So I put 10 crore for the purpose of buying the property. I like the property and I invested only 5 crore. Now I can't buy second one afterwards. 3-year period is also over. Everything is over. 5 crore I used. Cost of property plus stamp duty plus registration charges, brokerage, legal charges, everything included. Now 5 crore is still lying in my capital gain account. After 3 years, now that also will be 2 years. If I withdraw after 2 years, I will be liable to pay the tax as a long-term capital gain tax, what was liable at that point of time. 5 crore, I withdraw now. Now let us assume that I invested 10 crore, invested money today. Within 6 months, I bought the property. And within then, nothing more is required. So I want to withdraw the money. If I want to withdraw within less than 2 years, which was earlier 3 years, now I can say 2 years because of long-term capital gain reduced to 2 years, less than 2 years, then I need approval of the income tax department. I have to approach the income tax officer. Sir, I put this much money, now I don't want to own the property, or already bought this much I invested, balance I want to withdraw. So naturally, first question he will ask, what about your taxes paid, payable? Whether you have claimed deduction and invested money here, now you are liable to pay the tax. So work out the tax. So we have to work out the tax. Either we pay the tax and show him the challan, or make a satisfactory arrangement. If whenever I withdraw the money, first I will pay the tax. So bank may, income tax may allow only to withdraw that much money which is liable to tax. So they will allow me part withdrawal. I pay the tax, show him the challan, then he will allow to withdraw. But if after 2 years I want to withdraw, no condition is there. I have to pay the tax as my own, like advance tax or whatever tax we other pay in that system only. Recently, there was a system that time, NSS one certificate was there, of course, nothing to do with the capital gain. Up to 88, 89, certain part of our income, I think up to 60,000 rupee per annum, we were allowed to invest in NSS, National Saving Scheme. Not National Saving Certificate was different. They are at par with the various other investment. But National Saving Scheme, moment you invest the money, you are not able to pay the tax. You have to reduce from the income allowed. Whenever you withdraw from the post office, you are supposed to pay tax on that. So many persons were not even withdrawing for 20 years. And interest, whatever you withdraw, you have to pay tax till you not withdraw money is accumulated there only. Money will, like PPF account, it will be remain there. Somewhere last year in 2024, government came with a circular. Now onwards, you will not get any interest on that amount. It will lie without interest. So few percent have withdrawn, but person who has a higher slab, they say remain chalo without interest bada rehne to nikalega to tax chala jayega. Now this budget mein government said, even you withdraw the money, it is not taxable. When I invested, it was taxable. Before the budget, if I withdraw, I was liable to pay tax. But now they say you withdraw the money and principal and everything, because we are not giving you interest, money lying there, accounted discontinued 30, 40 years back, still money lying in NSS account. So now you withdraw whenever you want and don't pay any tax on that. So now everyone is after the withdrawal. So sometime, earlier act was saying something, amendment was there, and you are not liable to pay the tax on that. Now, okay, certain additional, we will touch or keep only restricted to the builder and developer and our capital gain only, because otherwise, there was some jewelry, drawing, painting, they are also capital asset, but they are liable to tax. It is not exempted item because they have cost. Agricultural land we already discussed. Compulsory acquisition we have discussed. Area 2 km, 10 km also we discussed. Now, as far as agricultural land is concerned, I will just tell you 4-5 points which we must keep in mind. There should be agricultural land. Land should be situated in India. Land situated in overseas is not considered. The word used for section urban agricultural land and rural agricultural land. So what we are talking is about the rural agricultural land, not urban agricultural land. A distance from specified area will be calculated aerially. So Google पे जाना पड़ेगा. Certificate from Patwari is to be obtained. What product was there? What is the population of that particular area? And there should be documented in respect of the, if you have shown the income, then that is a pakka proof income tax accepted agricultural income. But for example, I have not shown my income, but today I sell my land. Then I have to make some calculation that some income udhar se nahi aata tha. My cost was more than the income. Always I used to make loss only. So I am in Bombay. Somebody was working as an employee of my person. His cost was more than that. Electric bill was more than that. Tractor rent was more than that. So hardly there was any income. So I have not shown it. Loss I have not claimed. So some ground has to be done. But land should be there at least. Agriculture income is exempted. Even I have no land. I take land on a rent and do my agriculture work. Still it is exempted. I myself do it. I can get it done through some other person. Then also agriculture income is exempted. But sale of agricultural land, when capital gain come, I have to prove at least I am owner of a land. Long, it can be long lease also. But I at least my title is there. In one case, one appeal have come to me a few years back. One person had purchased 7 agricultural land. Say for example, month of January 25. April mein he sold whole land. In April, within 3 months, he purchased for say 1 crore rupee, sold for 7 crore rupee and made a 6 crore capital gain, and he said it is exempted. ITO say, yaar, you purchased 6 land. After selling, it come to know that there was a part of land which was not even, they were actually 8 plot. He purchased 7 part. In between, 8 was inside that. So no outsider was allowed to enter in that plot. So he thought he's also owner of that and he sold it. Later on, 8 party came up. He said, ये तो हमारा land आपने कैसा बेच दिया? So of course, then out of court he settled and paid the money to him. So one land was sold as a agricultural land which was not even owned by him. Then finally matter came before the appellate authority. Court said, why you sold? We have written to note to tribunal. Sir, after purchase of this land in month of January, my father got heart attack, my grandmother expired, my mother got cancer. A business where we are making profit every year, it was a loss. So we consulted some astrologer somewhere in Bangalore. He came to our land, and as per his calculation, there was a Kabristan 200 years back. So the land is not lucky for us. So the Pandit advised us to sell as far as possible. And we put in a market, we sold also. Our nasib was there, we got 7 crore against 1 crore. Court allowed that item and treated as a, because other court said whatever other conditions are fulfilled or not. What is the population of that place? Where the Patwari is record? Distance from municipal corporation? Whether agriculture was really there or not there? Patwari is given. We have not shown as income. But Patwari said, यहाँ पे चावल होता है, गन्ना होता है, ये होता है, वो होता है, first list ये given. Different plot, different area. The Patwari is the main person of that place. And he has given that calculation of before I purchased the land. Government, stamp duty department charged me tax at the rate of agricultural land, not on the normal urban other than agricultural land. So finally, it was allowed by the tribunal. So there are number of decisions are also there, which I quoted here. Compulsory acquisition we already discussed. Transfer we already discussed. What is possession? What is occupation? Possession is defined in India Income Tax Act where neither possession is defined nor occupation is defined. So we have to go to the Transfer of Property Act. Section 50 talk about the possession, means I have given something to somebody with a right to sale, right to mortgage. Then he is in possession of property. I have given to somebody only right to use and occupy. Then I have given only occupation. If I parted with the occupation, I am not liable to pay the tax. Parted with the possession, liable to pay the tax, whether money received or not received. We have 5 head of income. Only business income I can have option to show on the cash basis or mercantile basis. All other 4 income, salary, house property, capital gain, other sources, all on the mercantile only. No cash business is allowed. Any word in income tax have double meaning. It can be taxed, it cannot be taxed. It is allowed, it is not allowed. Then meaning in favor of assessed will be applicable and not in favor of revenue. Like in Bombay, recently I got one case, last week only. I got the order, hearing taken place 1 month back. There was one bank occupying some property of a cooperative society. Bank, society is having no money. So 30-year bank said, we'll fund you paisa for the construction purposes. You give us this property of 2,000 square feet at the rate of 6 rupee per square feet. Even then, that time market rate was 20 rupee. So the society got loan of roughly 10 crore rupee from the bank. They constructed one building near the main society building, another building, given to the bank at the rate of 6 rupee. By 2000, 30 year is over. Loan was repaid. Lease period of 30 year is over. So the society returned to the bank, kindly give us a possession back or pay us a rent as per the market value. And market value in 2001 was 200 rupee per square feet. Bank refused. Finally, party filed case against the bank. So court has passed the order that bank has to vacate or pay 200 rupee. Finally, bank vacated the property in 2005. Then party filed another case. From 2001 to 2005, when bank was illegally occupying, they were paying me only 600 and rate was 200 rupee. So they must pay me difference. So the court has passed the order that 4 crore rupee will be paid by the bank to the society as a means profit. Means profit means illegally somebody occupy, which you is not entitled. Then whatever profit is given is the means profit. There was a Bombay High Tribunal, larger bench, 5 judges ka bench tribunal was there in case of Radha overseas, that means profit is not taxable. After that, Calcutta High Court, Kerala High Court, Madras High Court also decided it not taxable. See, in time, Delhi High Court decided it is taxable, and Delhi High Court has considered large bench judgment. They considered Kerala High Court judgment, considered Madras High Court judgment. Calcutta was not considered. Now cases have come in the Mumbai. So Bombay mein tribunal has decided that when two high courts are there in different situations. Now here what happened? All three high courts are in my favor. Kerala, Madras and Calcutta. Delhi was against me. But Delhi have considered larger bench case of high judges and Delhi also considered Madras High Court and Kerala High Court. But Calcutta is not considered. So Calcutta is one judgment now, Delhi is second judgment. When two High Court judgment is there and Bombay High Court is not there, then judgment in favor of SSC will apply in Bombay, not in favor of revenue. And appeal was allowed in our case. So whenever such controversy come, we have to go through this thing. I think, friends, we will end here. Or let us see 1 second. Then we'll take some question answer if any. Yeah.
Sir, there are many questions, but
I think सर क्वेश्चन ही ले लेते हैं, मेरा करीब कवर हो ही गया.
सर मुझे लगता है काफी कवर हो चुका है.
Yes sir, yes sir. तो अभी आप क्वेश्चन ले लीजिए सर.
Thank you very much, sir, for your enriching and thought-invoking session. Your deep insights, real-life examples, and unmatched clarity have truly helped simplify a complex subject like taxation of real estate. I am sure all participants are gaining greater confidence and understanding today. सर ऐसा लग रहा था जब आप बोल रहे थे कि आपके जीवा पे लक्ष्मी सरस्वती विराजमान है. एकदम इतना कॉन्फिडेंस और इतना क्लैरिटी था. थैंक यू वेरी मच सर फॉर इनलाइटिंग अस ऑन द सब्जेक्ट. Now we will have a brief question and answer. I have participants are already shared their question in question chat box, but we can take whatever possible questions. Sir,
आप रीड कर दीजिए सर, मैं जवाब देता हूँ फटाफट.
हाँ,
आप ही उधर से पढ़ लीजिए.
first question. This is before starting the session. Taxability of commercial premises where the building is in redevelopment and person getting new commercial premises with free and area and additional area. I think this is already covered.
Covered, taxable.
A revenue sharing model is being developed with 45(5)(a) would be applicable as there is no share of development area. I think it is covered development.
On occupation, we have to pay tax.
Yes.
When occupation certificate is received, we have to pay.
How to ensure developer who collects GST from members is paying to the government?
Otherwise, also it is liability of developer only.
Yeah.
Government will recover from him only.
Whether section 45(5)(a) is applicable to flat owners in the housing society.
Yes.
For the organizers, ICI is having all the details of all the members. So after the disclosure of the membership number by him, her reputation of the same may please be avoided. Okay. Whether the developer can noted this query, whether the developer can opt for different accounting method for different projects. Is
Yes.
it mandatory for him to follow same accounting method for all the projects? No.
No. If I have 10 projects, all
Yes.
different system can be there in each project.
Due to a compulsory acquisition of my residential excess land by municipal corporation. It is incomplete query. Sir, many queries are
It is
incomplete.
exempted, sir. Compulsory acquisition by municipal corporation will be treated tax free.
Great. How to determine date of completion of project for the purpose of project completion method where a certain number of flats are still unsold?
Very good. A good question. Actually, what happened? For example, I'm a builder. I constructed 100 flat. Occupation certificate received. Up to that point of time, I sold only 50 flat. So my 50 flat sale value, I know. I parted with the possession document registered. 50 is still lying in my stock. So as far as whatever stock is concerned, I have to value at cost or market value, whichever is lower. Let us assume 100 flat, my cost is 100 crore. Each flat is worth 101 crore rupee. Now 50 flat I sold for 60 crore rupee. So my sale value will be 60 crore. Cost will be 50 crore. 10 crore profit is there. And my 50 crore stock will appear. So whenever I sell that out of stock, I will pay tax on that. OC आ गया मतलब I don't have to pay tax on everything. Whatever I sold, whatever money is received, on that I will pay.
Great. Thank you, sir. Property went for redevelopment and builder is paying monthly rent amount as a compensation. Is such amount is taxable as rental income or it should be capitalized?
Sir, before Bombay High Court decision, we always used to say it is taxable. But now Bombay High Court has decided a half a dozen case, and I also given 2 judgment in my note which I sent to you. So it is exempted now. And Bombay High Court, if Supreme Court changes tomorrow, nobody knows. But as on today, we can assume it is exempted.
Sir, organizer just confirmed that note we will share with the registered members on their email ID. Uh, can you please repeat compulsory acquisition? We have
Yeah.
already covered.
Compulsory, when government acquire anything compulsorily, after 1st January 2014, it is completely exempted, whether acquired by central government, state government or municipal corporation. If anything acquired up to 31st December 2013 will be taxable. Compulsory acquisition mein amount tax is payable only when you receive the money and not only when government acquired the property. So whenever you receive, it will be taxable. Cutoff date is 31st December 13. Acquired before that and even you receive money today, taxable. Acquired after 1st January 2014, not taxable. Whenever you receive, is okay.
Thank you, sir. An assessee has given possession of his flat in housing society as per the specified development agreement in 24-25. He will receive new flat plus 25% extra space plus hardship allowance, rent for alternate flat during construction period. Possession will be received within 3 years. Sir, now the query is how to present the above in ITR of financial year 24-25.
24-25 mein, nothing is to be mentioned. Whatever money you receive in advance will show in advance in the balance sheet. And if business income, then wherever column comes. Only when occupation certificate is received, when you receive your flat back, that time you to work out. So hardship allowance is tax free completely. Rent is completely free. Both cases supported by Bombay High Court. As far as area is concerned, you have to work out what is the ready rector value of the new flat, what you are getting. What is the value of 2001 or cost, whichever is higher. Balance is taxable. Balance is less than 10 crore, 54 का डिडक्शन मिल जाएगा. If that is more than 10 crore, balance आपको टैक्स लग जाएगा 12.5%.
That is the query, sir. Whether it is necessary to incorporate the period of possession within 3 years in the specified JDA to claim deduction under section 54. What if
Yes.
builders mention 4 years in JDA?
No, if you return in the JD 4 year, आपका chances deduction 10 crore का मिलने का बहुत कम हो जाएगा. Because section 54 all talks about 3 year. But if it mentions 3 year now and builder is not giving, because like there's a builder and me, for my flat is there. I have done everything whatever was to be done by me. If I have not performed my duty within 3 years, then also I will not get deduction. So let us say whatever I have to do, I have done. Builder is not giving me, then courts will come to our rescue and deduction will be allowed. But agreement में 3 year ही लिखने का है. Another view is that, which I don't agree. Recently, one of my friend, also one of my junior came to my office and he was also doing a lot of appeal work. He was telling me, sir, now cut-off date have come later on at the time of occupation. So from date of possession to occupation, we don't have to count. From occupation certificate के बाद में 3 साल लगेगा. But I don't agree. Better not to take litigation. Better to let it be clear. Write 3 year in the agreement and then proceed. Or what you can do, write 4 year from today, but the day I hand over to the builder for reconstruction, from that day 3 year. और only 4 year लिखा है, तो better to make supplementary agreement कि originally we have written 4 year, but now we are making 3 year from handing over possession. Development agreement आज sign कर दिया है, मैं possession 1 साल के बाद दूंगा, तो my 3 year will start after that date.
Yes. Possession we can show in future, right?
Yes.
Indexation is available up to the year of JDA or up to the date of completion certificate. Whether we can claim rent received as exempt, वो आपने cover कर दिया. Relying upon Bombay High Court, which was on TDS from rent. Whether any other Mumbai High Court decision, वो हमने cover कर लिया.
2-3 मैंने कोट किया है सर, देख लेना. उससे ज्यादा चाहिए मेरे को फोन करना, मैं दे दूंगा.
Yes. What is the tax liability? Next, sir. What is the tax liability in case of TDR sale? TDR received on account of the reservation by corporation due to planning.
If it is individual and HUF and they receive the TDR from municipal corporation and there is no cost, then of course the sale value also will be exempted. And the Bombay terminal के बहुत सारे decision है. One, if I am a builder, my main heading is a business income, then it will be taxable under here the business income.
My property is next query, sir. Thank you. My property is an urban agricultural land which is acquired by state government, and they have provided us a DRC as a compensation. Now this DRC is not taxable under Income Tax Act, but since I am an agriculturalist, the DRC received is no use for me, so I sell it to the builder to encash the DRC. whether this transaction is taxable under income tax.
In my personal view, the day you got a DRC, that day, whatever the value of the area, whatever you are going to get the area, rector value up to that extent it will be exempted. If you receive more than that, it will be taxable.
Good. Next, sir, it is a rural agricultural land, but no agricultural activities were carried out. Whether it will treat as capital asset as per section 214.
In my personal view, yes, and there are number of judgments.
Okay, sir. Thank you. In next query, in case of redevelopment project, the buyer gets additional area. In addition to that, buyer also purchase some additional area from the builder. Now buyer needs to deduct TDS under section 194IA. Whether in this case the redevelopment such TDS at 1% is to be done on which value? Only the value on which actually paid to the builder or the deemed value of full area?
No, what area money what I paid to him on that part.
I think the agreement, it is depend on the agreement how we execute.
Yes.
And in case of additional area, we execute separate agreement.
Correct.
Right, sir. If the assessee is not satisfied with the valuation determined by the valuation officer, can he file appeal? What resources available to the assessee?
First, the ITO will send a notice, your rector value is more, I want to add under 50C or 43CA or whatever section to the seller or 56 to 10 to the buyer. That time we will tell him, first option, even section provide, for example, I book a flat in 2016. Registration has taken place in 2019. 16 mein value was a 10,000 rupees per square feet. 19 mein it is 15,000 rupees per square feet. I already paid stamp duty on 15,000. That is why problem started. So I have to say him कि देखो सर लेटर ऑफ अलॉटमेंट मेरा 16 का है. First payment I made by check. Cash payment तो नहीं चलेगा. By account पे cross check in 2016. So you take the rector value of 2016. Or we can work out ourselves what is the value of 2016. If that figure comes within 10%, then no problem. Because of course normal course में 16 में no limit was there. 1920 में 5% आया था, 21-22 में 10% आया. But such cases में whenever some amendment is there and benefit is given, that benefit apply even retrospectively. So 10% normally is accepted. अगर आपका वो भी उससे भी डिफरेंस सेट नहीं हो रहा है अर्लियर कॉस्ट बताने से, अर्लियर लेटर ऑफ अलॉटमेंट बताने से, देन वी कैन टेल हिम रेफर टू डिस्ट्रिक्ट वैल्यूएशन ऑफिसर. District valuation officer will consider all the thing, and if case is really complicated, one can go through this any book of the valuation of some proper good author, and you will find hundreds of reasons. Sometime flat on higher floor have less value and ground floor have more value. So अपने favor का क्या है? If flat is in the front, he say I'm not able to sleep, sir, whole day there is disturbance. Back side में I cannot see anything. Lower floor, you can say, sir, no light is coming. Higher floor, you can say, sir, lift is not working. So when I'm in big problem, ऐसा 400 पॉइंट आपको मिल जाएगा और एक एक पॉइंट का 1%, 2%, 1%, 2% कम करेगा तो एंड ऑफ आपको लगेगा फ्लैट तो फ्री का ही है, मैं तो खाली बिल पैसा देके बैठा हूं.
Right, sir. Next, sir, it is related to GST. Have you come across a case where due to enhancement in the income of the builder under income tax assessment, the GST authorities has also raised demand on the incremental income amount? I think it is depends, sir.
हाँ, डिपेंड ऑफिसर नॉर्मल कोर्स में नहीं लगेगा, तो जीएसटी इनकम टैक्स में तो डिमिंग सेक्शन के हिसाब से बढ़ जाता है नोशनल वैल्यू. यू एग्री टू बाय द लिटिगेशन.
Why it is
जीएसटी में वो ऐसा प्रोविजन नोशनल का भी आया नहीं है.
नहीं, why it is increased? It depend on the assessment.
Assessment.
If it is disallowances of expenses,
हाँ,
then
और again sir,
nothing to do with
GST
the
is not my
GST.
subject. One of my senior colleague is sitting with me. He knows GST something.
Yeah.
So he
But
said
that-
नहीं लगेगा.
Yes, thank you, sir. At the time of COVID, even bigger flats of value of more than 15 crores at lower parallel were sold at 40% discount to stamp duty value by the builder. In such case, what is the stand to be taken? The builder has received occupancy certificate in 2016, but the property was not getting sold. But in COVID year 2000, he sold the property for 11 crores. In such case, how to go about it?
केस डिपेंड करेगा सर. वन हैज टू मेक द केस दैट टाइम सेल इंस्टेंसेस, पेपर कटिंग, ट्रांजेक्शन कोई हुए होंगे उस एरिया में, क्या हुआ है, टेक ए वैल्यूएशन रिपोर्ट, यू कैन रिलाई ऑन सर्टेन अदर इंस्टेंसेस के भी यही वैल्यू था. ऑल डिपेंड.
Next question, sir. Please throw some light on taxability of sale of TDR bonds.
TDR, if individual and HU have sold the TDR certificate, then of course there are a number of judgment it is not taxable. It is a capital receipt because there is no cost. Cost was of the land, not of the TDR. So basically the land tha to TDR mila. But anyway, the court have decided that cost was of the land and not of TDR, so TDR is exempted. But if I'm a builder, I'm dealing in this item, then of course it will be taxable.
You have already covered. What will be the period of holding for flat booked in under construction project? Suppose I book flat in 2019, the completion of the project was in 2024, and I sell it in 2025. Whether the such asset will be long term or short term?
It will be long term. पहले ऐसा rule था कि if I book a property with a builder and before possession I sell and complete 3 years, then it was long term. उसके बाद में आ गया certain judgments. If I taken a possession in between, then again I have to complete 3 years from that day, which now it will be 2 years. But
Again,
then
sir,
assessment is 1819 onwards, law is amended कि one person, one long-term asset to another long-term asset is this is simply a girl who is a 20-year-old. She get married. Her name changes, but birth certificate will remain the same. Her degree and everything will remain the same. So here also, originally when I booked the property and when I sold, in between I got the possession is not relevant. From that day onwards, it is long term, it is long term. So
again, sir, I think some facts may be required, like execution of agreement date.
Yeah, allotment letter होगा पहले,
Yeah.
payment
Yes, yes.
होगा, agreement होगा. From
Yes.
that day, date of finally sale.
Yes.
मीन्स पहले जो पोजीशन का डेट क्रूसियल आता था बीच में कि
हाँ.
पोजीशन हो गया तो वी टू काउंट अनदर 3 year, वो अभी बंद हो गया है आफ्टर 1819 असेसमेंट इन ऑनवर्ड्स.
If gift is given, will there be a stamp duty?
गिफ्ट में स्टैंप ड्यूटी है ही नहीं सर प्रॉपर्टी में तो.
Yes. 50 next session question, sir. 50% of single flat can be gifted.
Yes, 50%, 20%, 10%, whatever you want, undivided right title interest can be gifted. और गिफ्ट टेस्ट में तो अभी क्या हो गया, हर एक स्टेट का अलग अलग लॉ है. एज फॉर महाराष्ट्र इज कंसर्न, इफ गिफ्ट इज गिवन टू द सन, डॉटर इन लॉ, वेयर सन इज पास्ड अवे, तो स्टैम्प ड्यूटी खाली 200 रुपया है. 200 रुपया की स्टैम्प ड्यूटी, 200 रुपया रजिस्ट्रेशन फीस. पर यहाँ पे मेट्रो का काम चल रहा है तो दे पुट वन एक्स्ट्रा 1% मेट्रो टैक्स. इफ गिविंग गिफ्ट टू द ब्रदर, सिस्टर, फादर, मदर, 4%. गिफ्ट गिवन टू द अदर देन दिस रिलेटिव्स तो 6%. तो इनकम टैक्स का रिलेटिव अलग है, स्टैम्प ड्यूटी रिलेटिव अलग है, कंपनी लॉ में रिलेटिव अलग है. तो हियर वी विल टेक स्टैम्प ड्यूटी रिलेटिव.
What about taxation of builder giving lump sum corpus fund to housing society?
बिल्डर विल गेट द डिडक्शन, सोसाइटी में एग्जेम्प्टेड है.
Proceed.
बिल्डर का एग्रीमेंट के हिसाब से उसको देना है इतना कॉर्पस. दिस इज पार्ट ऑफ कॉस्ट ऑफ लैंड कॉस्ट.
An NRI, citizen of India residing abroad, where he is not liable to pay income tax, has transferred a residential house property during financial year 25-26 this year, getting a capital gain of rupees 1 crore. He is deemed as a resident in India for 25-26 by virtue of section 61A. What is the TDS rate applicable in this case to the buyer? Is it under section 194 IA or section 195?
ही इज ए रेजिडेंट और नॉन रेजिडेंट एज ऑन टुडे फॉर दिस असेसमेंट ईयर.
He is non-resident India.
हाँ तो लगेगा 15%. और यू गो टू आईटीओ एंड अप्लाई द लोअर सिटी सर्टिफिकेट.
So 195 will be applicable.
यस.
Sir, is it enough if advance is given by the due date of filing of return on the basis of agreement of sale, but flat is not registered within 2 years from the date of sale of open flat to claim deduction under section 54F?
द 54F अप्लाई रेडीमेड हाउस के लिए 2 year, अंडर कंस्ट्रक्शन 3 year. नाउ हियर एडवांस इज गिवन.
Yes.
So he don't have to block the money now. Money is given to builder. He have made a proper agreement. Now from date of sale, if possession is not received within 3 years, then he will be denied deduction.
Just flat is not registered, he mean to say. Yeah.
Registration चलो 3 साल में कभी भी हो सकता है, but rule तो ऐसा है नहीं. The moment you make the agreement, within 4 months only you can register. After 4 months to 8 months, there is a penalty and registration. After 8 months, it cannot be registered at all. और अपना सुप्रीम कोर्ट का बलवीर सिंह म्यांमी का केस है, इफ इट इज नॉट रजिस्ट्रेशन, डॉक्यूमेंट विल नॉट वैलिड डॉक्यूमेंट. सो एंड ऑफ द डे तो उसको रजिस्टर करना ही पड़ेगा. या अभी ऐसा कर लेवे, अभी ऐसा ही अलॉटमेंट लेटर बनावे, पैसा दे देवे, विद इन 3 years बिफोर पोजेशन ही रजिस्टर्ड दैट टाइम एंड पे द बैलेंस इफ एनी बैलेंस आउटस्टैंडिंग एंड टेक पोजेशन.
Sir, there are many questions still pending. So I think we will take it later on because timing is over. Can we quit, sir, questions? Because there are more than 50
As far as I am concerned, I have no problem, sir. You take a call.
Yes, sir. Thank you, sir. as we draw this insightful session to a close, I take this opportunity to thank our today's esteemed speaker, respected Sri Vimal Pungliaji, our Vice Chairman Vishnu Kumar Agarwal, uh, Chairman of Direct Tax Committee in absentia, CA Piyush Chajed, all the participants, and our technical team behind this success. On behalf of Direct Tax Committee and myself, I thanks once again and wish you continued success in your profession. Stay safe, stay healthy. Jai Hind, Jai Bharat, Jai ICI. Thank you, sir.